Hey Dividend Growth Investors, Mike Yahoo here, founder of Dividend, Stocks Rock, and Passionate Investor. Last week, I told you about a crazy stock almost doubling in value just this year alone and up more than 2,000% since the past 5 years. So if you want to look about this one, just look back at the channel. But today we are going on the other side of the moon and we're talking about a stock that dropped double digit over the past 2 months. So between February and April, Alimentation Couche Tard is on the tear. It's going down and it's terrible. And what really happened over there, and I got a lot of questions because you know me, Alimentation Couche Tard is one of my largest positions in my portfolio. I've been a big fan of this stock. I've been the poster boy for several years already and got to go those questions. Is it time to let it go? What's going on? So let's take a look at what really drove the price down over the past couple of months. So long story short, it was a bad quarter, and actually a very bad quarter when you're thinking about this business that usually reports double digit or high single digit growth everywhere. This time sales were slowing down, not too much, but a little bit. And the most important part, earnings per share were down double digit. So problem with growth, problem with margin, problem with the economy, consumers are spending less, smaller margin on fuel, and then boom, we're going back with the media circus. So on BNN, they're telling us that it was a really bad quarter, that ATD is facing economic headwinds and it's not about to end. On the Globe and Mail, now they're selling, a bunch of companies cannot find ways to sell their gas station. They struggle, it's not working, they're not making any money. The Hustle Daily reported that like 2 years ago where like gas stations are not making money anymore. It's a dying business, everybody's driving Tesla, and there you go. Alimentation Couche Tard is gonna die pretty soon. So that's pretty much the portrait of what we got, a bleak future from the media right up front. Before we go to the rest of the video, I just have to take a pause where this is exactly what I read about Couche Tard in 2021 when I did one of my videos telling you that it was an amazing opportunity when they announced that they wanted to buy Carrefour. The deal got shut down and the stock price dropped by more than 10%. I just highlighted the fact that I doubled down on that position. I almost doubled my position in my portfolio, and it was an amazing play. Now, when a stock goes down, when the narrative is very negative here around the stock, and I see that the business has a bad quarter, what do I do as an investor? Because that's a lot more important than what those guys at the Globe and Mail or in BBNN thinks. Because they have their investment thesis, they may or may not have invested in that stock, but I do have it in my portfolio, so that's a lot more important. So what I do is I look at my investment thesis and I make sure that it's aligned with the dividend triangle, and this is what we're gonna do in this video with Alimentation Couche Tard. So first things first, I go back to my investment thesis. So this screenshot is coming from Dividend Stocks Rock. We do have investment thesis like this for more than 400 companies on both Canadian and US side. And for Alimentation Couche Tard, what is really important here is there are a lot of growth vectors. So they acquire a lot of business like other gas station and other competitors. They have this ability to integrate them seamlessly and improve their margin. They report a very strong dividend triangle. We're gonna see that in a moment, but revenue, earnings per share, and dividend keeps growing steadily, and they have multiple growth vectors. So not only just on the acquisition side, but they found ways to grow their business by getting their own products, which is good for their margin, by improving the number of products with great location, making sure that they are everywhere for both fuel and now charging station across the globe. So those are the reason why I have it in my portfolio. So after a bad quarter, probably that all of those reasons didn't disappear. So we're gonna look at the business and we're gonna look at the dividend triangle to see what it looks like today. So dividend triangle that you see here is very interesting. This is again from Dividend Stocks Rock. We published like 10 years of information. And as you can see, the revenue dropped during COVID, but earnings didn't. So that tells me that this business, on top of growing high single to double digit, you can see the 5-year annualized growth rate. So 8% for revenue, almost 17% for EPS, and more than 22% for dividend. So on top of growing, they can go through a recession without any problems. They are able to maintain their business alive. So that is another reason why I love this stock. So far, I'll look at that. Yes, there is a slowdown in revenue and earnings over the past year, but it's not necessarily alarming because we are facing economic headwinds. So it is making sense that this business is not growing double digit over the past few months, right? Now we're going to take a look at the business model itself. So the geographic mix and the product mix. So while they do generate a lot of sales with their fuel, they make a lot more profit with convenience store sales. So 74%, so let's say 3/4 of their sales are coming from fuel, but only half of it is generated, half of the profit is coming from fuel. The other half is coming from that convenience store. So focusing on improving the convenience store experience, getting more products there, and attracting more customers inside the convenience store is key for Couche Tard going forward. One of the most important growth vectors throughout the entire history of Couche Tard, and it's growth by acquisition. They have that nose, that expertise. They know when to pull the trigger, when to make the deal, how to pay the good price. And they just did it again with Total Energy by buying another 2,200 convenience stores, including gas stations. So for those who are saying, we cannot sell gas stations anymore, well, Alimentation Couche Tard just bought more than 2,000 of them. So I guess there are definitely some buyers over there and some companies that see value in those gas stations. This growth by acquisition has improved their diversification. Now they're just not dependent on the United States, but they do have almost 17,000 stores across the world. So they are present in the US, in Canada, but also a lot in Europe and also in international market. Their presence in Europe before the recent acquisition was mostly in Norway, where we have the highest level of electric vehicle per capita. And you know what? They are still thriving even though they're not selling gas anymore, which is kind of like a story that we got sold by media, but literally we are going to sell fuel for at least 10 years, maybe 20, because the transformation, the shift towards renewable energy, it's not that easy to achieve. What I like the most about Alimentation Couche Tard though is their management team. They are experienced and they have a clear vision. They share that vision with us and they tell us how they're going to be able to grow. So 5 years ago in 2018, a little bit more than 5 years ago actually, in 2018, they had their vision to double their earnings within 5 years. So between 2018 and 2023. They had a clear plan, they executed it flawlessly, and they brought us there where they more than doubled their earnings per share in 5 years. Now they came back with another plan that is pretty much very similar to the previous one, where they intend to grow their business once again. Not doubling, but almost in the next following 5 years. And then we're already in year 1. We're talking about growth by acquisition, but also about organic growth across many factors. So those factors starts by organic growth, getting more of their own brand in their convenience stores because they're making more profit out of that. Focusing on food and on beverages to ensure that all people coming into their convenience stores, where they are literally everywhere, they will consume snacks, beers, coffee, chocolate, and everything else in the store. Their second focus is about the fuel supply chain. They want to be also everywhere for businesses, for trucking companies, because we're still far away from everybody that will have electric trucks. And even then, while they will have the charging station, because those electric trucks, they will have to stop somewhere to charge. And it's not true that they will all charge at home as well. So they focus on improving and increasing the lifetime value of their fuel business, which I think still has at least more 10 years to go going forward. They will also improve the experience within the store by adding quick cash where you can just do the transaction by yourself. You will have a digital experience, you have loyalty cards, bonuses, so they want to attach their customer as much as they can. Obviously, it's a tough business at this point, but focusing on those key points will help them to win more customers. And finally, well, growth by acquisition has always been at the core of their model. They continue to do that, and it's not necessarily going to be gas station in the future. They could try to get into grocery stores once again with another company. It didn't work out in France, doesn't mean that it's not going to work out elsewhere. I definitely trust management with that as well. So going back to, should I get rid of Alimentation Couche Tard today because they had the bad quarter? I mean, that's a lot of like short-term vision, right? And it's a lot of being influenced by media and noise. In my position, what I always do is first, I trim my top winners every year. So whenever a stock goes above 10% of my portfolio, I trim it, which exactly what I did with Alimentation Couche Tard in December. So I'm like, well, I already trimmed that position. Now it's going down a little bit. It's part of the game. No business is just going to be a straight line towards profit. It goes up, it goes down, and when it goes down, you have to go back to your investment thesis, to financial metrics, and determine if those reasons why you bought the stock in the first place are still valid. For Alimentation Couche Tard, in my opinion, for my portfolio, so I'm not telling you what to do here, everything is aligned with my strategy and it's still aligned with my investment thesis. So I'm going to sleep well at night and I'm not going to bother about looking at the stock price going up or going down tomorrow morning. If you want to find more interesting companies like this, you need to start with a strong stock screener. We do that at Dividend Stocks Rock, and we pull out the Rockstar list every single month. By subscribing in the link below, you will receive the Rockstar list, which are only companies on the Canadian side and on the US side with strong dividend triangles. So only companies with revenue growth, earnings growth, and dividend growth that are positive over the past 5 years. So it's a great start for you to find new ideas, to refine your portfolio, and to improve their potential returns. So click on the link in the description below, click on fill in the email, you will receive the list instantly, and then every month you're gonna receive an updated list, because you know what? Things change, economy change, business changes, so it's really important to keep up to date. I hope that you have enjoyed this video. Don't forget to give me a thumbs up, subscribe to the channel, and not miss my next video on next Thursday. Until then, don't forget to stay invested.